Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day, all. Ira Epstein of Linn Associates with your financial market wrap-up with the weekend edition for Friday, December 22nd, 2017, and we're in the 320 some odd time frame. The settlement price in the stock indices will come in here. But before I get involved in the marketplace, I do want to wish one and all happy holidays. Please be careful on the holidays. I'll be back on Tuesday doing my recordings right into the year end, so it'll be an interesting time for all of us. Before we get to too many of the markets, what you'll hear about, of course, is Bitcoin and the fabulous drop it's experienced. Today it went from 15,080 down to a low of 11,300 and then finished the day out near the 13,910 level, down about 1,380. But from high to low, if you take a look, it dropped about $10,000 from 21 and a fraction on some of the exchanges down to the 11,300 level. There's so many different coin, currency, whatever they want to call it, exchanges, it's hard to get all the prices to be the same, but I'm giving you the gist. Now, the futures price went down, any way you want to cut it, from near 21,000 to near 11,000, so about a $10,000 drop, and that is why the futures firms came out with such high margins. And it was first the exchanges. They came out with about 44 and 47% margins, depending if you're trading the Merck or the CBOE contract. Most of the firms I know of that are allowing clients to trade are substantially higher than that, with most, if you do short selling, being as much as 5 times or more that. So let's assume that they go to 5 times. That means you're putting up the value of a Bitcoin to double or triple its value if you think it through. Why? Because of the volatility. Will it be a successful contract? That's what remains to be seen. But we can say that the volume is picking up on it. I don't think there's still institutional players in it as defined by the world when we talk financial markets, of those playing stock indices and the like. However, there will be 6 new ETFs listed by the CBOE. I just read the ones that were filed. And I think the New York Stock Exchange has 2 ETFs coming out on it. So there's players coming in, and it's a market I'm super interested in, a market that, yes, I want my clients to trade soon, but not during the Christmas holidays. I'm still learning what goes on, and at the end of the day, we have to be able to be the ones as clearing firms to live with the risk. So, in learning as to what's going on, if you take a look at the energies, interesting play here before we get to the charts. The 40s pipeline supposedly will begin a gradual ramp up back into production starting Christmas, right around Christmas Day, and then right on through the early part of January. So, you know, there's about 80 rigs out at sea that have shut down because they can't get the oil to land. This is going to be an important event, bring everything back online. As for the gold market, we're getting a year-end rally. Pretty interesting. The dollar, a little bounce today at the expense of the euro. Okay, you still had the Spanish election, you know, in Catalonia that took place, and that, of course, weighed on the euro, but it seems to have done a good job of shrugging it off at day's end. Now, getting to the monthly chart of the E-mini S&P, and all I like to do is give an idea with the monthly chart as to what it is. People have called and asked me, can you trade off of it? Probably not. The risks are too big and wide, but that doesn't mean you can't use it as a tool to see what's going on. And since 2016, the interesting thing is it hasn't even come back to hit the 18-month moving average of closes. When we come to a weekly area chart of closes, the only time you got close to it on the weekly chart was back here in the July, August, September time frame, not the beginning of the year, and that has kept the market up. Do you usually get events like this? Absolutely not. Could this continue on? Don't know. I can tell you that the president signed the tax bill today. You're going to see paychecks fatten up come February, according to what he is saying. We've got the North Korean sanctions. Maybe they'll come to the table and talk. We've got Europe still doing well, and we've got China, which is loosening its credit, not tightening it, and that'll be expansionary. So you still got a market that's going into the year in a pretty good manner. If you look at just the bar chart of closes, looks good. The swing line has had a pattern of higher lows, higher highs. That is bullish. The market is over the 18-week moving average of closes and the 100-week, which puts the resistance point at the upper Bollinger Band, and you can see it hits it and backs away, hits it and backs away. Classic bull markets do this when momentum locks in, and you've got momentum locked in. It's just going sideways on the weekly charts above 80. That is what I call strength. It hasn't backed off. So I don't worry if it drops 10 points, 20 points in a day or goes up like that. The bigger picture is still bullish at this point. NASDAQ is similar. The daily charts are showing you a different story than the weekly. The weekly is still one of higher lows, higher highs, goes to the upper Bollinger Band, and you can't get away from this one part. I mean, let's face it, you're up 91 points for the week. It's pretty good, and it's still an all-time high. When you get to the Dow, all-time high, up for the week, 227 points, running away. I'm taking my mother out tomorrow, and yes, she's older, but she's well invested, and she'll be telling me I should have been a stockbroker, not a commodity broker. I hear it all the time from her. In the Russell 2000, of course, my mother at this age, every day's an up day for her in the stock market. Higher lows, higher highs, not making the new all-time highs with the other indices. So the bigger the index, and depending on the caliber of the companies in it, little fade back here happening. Momentum trying to turn back up right now in the market. Still up for the week, 34.5 points. In the VIX, I've gone to the weekly chart on this to just help you out and keep everything weekly right now. I normally show the daily. Lower highs, certainly lower lows. Momentum still locked in bearish, so the fear index hasn't picked up on a weekly basis. The 10-year notes on a weekly chart still very much in a bear trend. The market is still anticipating that with the tax bill, with the Fed still on, if you will, their idea of 3 rate hikes, with U.S. economic data coming out good, that everything's still at play, and that in the shorter term, interest rates are going up. In the dollar index, even with higher interest rates, it's where people are thinking the U.S. cycle is compared to China, Europe, and so on. And the dollar index is in a classic downtrend. Lower highs, lower lows under the 18-week average, and momentum is just turned down. To negate this pattern and turn the trend up, you can't take out 92.43. All you need to do is take out 94.21. You'd have higher lows, higher highs. I don't know what it would do to momentum at that point, but it would certainly be a surprise to the trade. What else is visual on the chart? Do you notice how we're going sideways on the Bollinger Bands all of a sudden? From there, we'll develop often another move. What's happened is you have used the last power of the market. You've come down. Now you're going sideways. It's almost like a spring in a pipe. You got to wind it and wind it and wind it. When you get enough pressure, it bursts out of it, and you get a trend, and that's what I think this market's looking at. The short-term trend in the dollar certainly down. The eurocurrency short-term trend to the upside. Higher lows, higher highs, momentum up, bias up. Here, too, we're caught in that sideways action after a market that rallied. It's the flip-flop of the dollar. After a market that rallied, it's pulled back and it's pausing. Is this market going to continue on? Certainly could. Aussie dollar has had a nice little run at the end of this month. Look at how its momentum is turning up. The trend is still down. You've got lower highs, lower lows. Even this week's high at 77.20 didn't take out the 77.26. Let's assume it does early next week. Okay, resistance 77.68, but the weekly chart is not turning up. In the Canadian dollar, a lot of sideways action right here. A lot of thoughts that Canada could be getting ready for another series of interest rate hikes. Don't know if that's going to happen or not. If it happens, could give it a bid. But based on this chart right now, you're in the middle of no man's land. You've got higher lows, higher highs. You're under the 18-week average. The two fight each other, you get nothing, and momentum is pretty flat in the market. It's not pointing up or down yet. Japanese yen fighting a battle still at the 18-week moving average of closes. They issued a report that I was reading today as to this is one of the slowest growth periods of young children that they've ever seen in Japan. In other words, the breeding isn't going on. I hate to use that word, but it's the population is not expanding with young people. That's going to weigh on this economy as time goes on. But in the meantime, we have a market that's got nothing on the weekly chart. We certainly have the swing line pointing up with higher lows, higher highs, but prices are under the 18-week moving average. The two fight each other. You don't get much out of that. Momentum is pointing up, and resistance is starting to show now between the 100-day average and the upper Bollinger Band. In the Brent crude versus WTI, I've gone to a weekly chart. Now, normally I've been showing daily charts even on the end of the week programs that I do. But as you can see, you're back up to the high where you've been. You still don't have the impact of the Fortis pipeline back online. It makes up a big part of Brent pricing. Give you an idea, 80 offshore rigs in the North Sea go through that pipeline to feed the UK. They're not at work. They're shut down. There's no pipeline to feed it to. Supposedly, come Christmas, gradual ramping up. You have to re-engineer everything, get it all ramped back up very slowly. Could take until early part of January to get that all done. But at least the good news is the company reported today that they're very close to beginning that next week. In the Brent crude, you can see how the impact of that is known. This news didn't come out after the market. It came out during the market. You've got higher lows, higher highs. You're still very much in an uptrend. You still have a market that's got upside bias. Same thing in the slow stochastics, still moving that way. And you can see that on the WTI, you've got the higher lows, higher highs. I'm not saying they're running to the upside, and for the WTI, the Baker Hughes came out today showing that the oil rig count stayed flat. Natural gas counts went up by 1. In nat gas, speaking of that, lower highs, lower lows, a downtrend, momentum still pointing down. Nothing very friendly through all that. As we come and we look at the end of this week, Christmas is here. Why not buy yourself a gift, my charting course? $79.95 with the keyword for the coupon XMAS. You get 6 hours of videos with the course. Yeah, I'm going to teach you exactly the steps we do here, but in a different way, much more complete. And I'm going to add not only to all the things you're used to, like swing lines, moving averages, the slow stochastics, the Bollinger Bands. We're going to also add for you window envelopes, a profit-taking tool that I don't show. It'd be too confusing on the lines. But as we get through all this, you're going to see what a chart with these studies, X the slow stochastics. I just want you to see what they'd look like as you put them onto a chart. And it looked a lot like this, just what you're seeing right through here. If you can make heads and tails of that, and I think I can get you to both the heads, the tails, the heads, you'll have a game plan, and that's really what I'm interested in, giving you a game plan to go with it, my research, and then in the mornings, that video where I talk to you before the day really gets going for you and set you up with what I think are day trade ideas, position ideas, how the trades that I had been handling are working out in my recommendations, and take it from there. You get this by either calling us. You can go to our website under the keyword education. You'll see it right there. You can come right up here if you'd like as well. If you're watching me on YouTube, just click on the icon you see. It'll take you right to that page. In the meantime, have a great weekend. Happy holidays to everybody. Merry Christmas and all. And I will see everybody Tuesday. Take care now.